This is Cashflow Ninja, episode 120 with Peter Schiff.
Welcome to the Cashflow Ninja, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Now, here is your host, MC Laubscher.
Hello everyone, MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show we're joined by Peter Schiff. Peter Schiff is the president and CEO of Euro Pacific Capital, an SEC-registered investment advisor and full-service broker-dealer. He's one of the few widely known economists and investment professionals that have warned about the financial crisis before it began. As a result of his commentary on the U.S. stock market, economy, real estate, the mortgage meltdown, credit crunch, subprime debacle, commodities, gold, and the dollar, he's becoming increasingly more renowned. He is a widely followed opponent of debt-fueled growth policies and known for his advocacy for emerging market and commodity-focused investments in countries with positive fiscal characteristics. Peter Schiff has been quoted hundreds of times in leading news outlets around the world, including the Wall Street Journal, Barron's, the Zeit, Tokyo Shinbun, South China Morning Post, Investors Business Daily, the Financial Times, the New York Times, the Los Angeles Times, and the Washington Post. He regularly appears on CNBC, CNN, the BBC, Al Jazeera, Fox News, and Fox Business Network. His best-selling book, Crash Proof: How to Profit from the Coming Economic Collapse, was published by Wiley Sons in February of 2007. His fourth book, The Real Crash: America's Coming Bankruptcy, was published by St. Martin's Press in May of 2012. Peter Schiff began his investment career as a financial consultant with Shearson Lehman Brothers after having earned a degree in finance and accounting from UC Berkeley in 1987. A financial professional for more than 20 years, he joined Euro Pacific in 1996 and served as its president until December 2010 when he became CEO. An expert on money, economic theory, and international investing, he's a highly sought-after speaker at conferences and symposia around the world. He also served as an economic advisor to the 2008 Ron Paul presidential campaign and ran unsuccessfully for the U.S. Senate in Connecticut in 2010. Please share your feedback and thoughts on today's interview. You can let me know your thoughts on Twitter by tweeting me at MC Laubscher or by email at info@cashflowninja.com. And please remember to join our mailing list by signing up at cashflowninja.com or texting Cashflow Ninja, one word, all capitalized, to 44222. That's 2 4s and 3 2s. Have you read Rich Dad Poor Dad? Are you interested in real estate investing and don't know where to start or how to get the results you want? For more valuable information to get you started, visit JoinUps Properties at joinupsproperties.com. Globally, coffee is a $90 billion industry, and International Coffee Farms offers a sustainable income opportunity through offshore sustainable agriculture. You can own a parcel of your very own cash-flowing specialty coffee farm in Panama. For more information on this income opportunity, you can download your free report at cashflowninja.com/Panama. Listeners of the Cashflow Ninja can also grab a free audiobook download from Audible when you try Audible for 30 days. You can grab your free audiobook download at cashflowninjabook.com. Peter, welcome to the show.
Well, thanks for having me on as a guest.
Can you please share a little bit about your background and journey with my listeners?
Well, I have been in the financial services industry pretty much since getting out of college. So that's pretty much what I've done. I think what differentiates me from, let's say, your typical guy that's operating in this industry is I've taken a very public stance of some very contrarian views. I don't buy into a lot of the mainstream nonsense that most people hear about when they, listen to financial television or read the journals or periodicals where people write about the economy and about the markets. I am very negative on the U.S. economy in particular. I mean, I focus more on the U.S. economy because I am an American, and so the issues here are more germane to me. And of course, most of the people who follow me, I think, are Americans, although I do have a pretty good global audience. Thanks to the internet, it's a lot easier for people around the world to know who you are. But a lot of Americans certainly follow me. And so I have a broker-dealer, Euro Pacific Capital. I have an asset management company, Euro Pacific Asset Management. I have a bank, Euro Pacific Bank. I also have a Canadian broker-dealer. I specialize internationally. Obviously, if I'm worried about the U.S., I'm even more worried about the dollar, which happens to be trading near 14, 15-year highs. But I think it's perched on a precipice from which it's going to collapse. But I try to invest money for clients in countries that I feel are fundamentally in much better shape, where their politicians and central bankers are making fewer mistakes, right? Where they have more economic freedom, they have lower taxes, less regulations, they have trade surpluses, current account surpluses, people save their money, they don't live on credit cards and leverage and mortgage debt and home equity extractions, and so that's what really differentiates me. I've written quite a few best-selling books, New York Times bestsellers. I do interviews like this one, and also on cable news, CNBC, Fox, places like that.
No, fantastic, and I'm honored to have you on. I've been following your work since the Wall Street Unspun days, and your books Crash Proof 2.0, and The Real Crash. And in your book, Crash Proof, you had predicted the crisis in 2007 and 2008. And I just remember, for listeners that want to look this up on YouTube, just type in Peter Schiff was right. There's a whole compilation of all these mainstream network talk shows that you were on. We're completely contrarian view than what they had.
What's more important, though, for people to understand is, as accurate as those forecasts were, and they were extremely accurate, I saw the 2008 financial crisis as just a precursor to a much larger crisis that I thought would result from that crisis.
Right.
And what I didn't know was how much time would transpire between the events that I predicted in 2008 and the subsequent, even worse collapse that I thought would follow. Now, I didn't put a time limit on it. I didn't say that there'd be a year or two or three or even a decade. I didn't postulate. But looking back, and I remember the things that were going through my mind when I was writing that book, I did not believe that it would take this long. I mean, if somebody asked me, I would have given the odds of us going 5 years, let alone 8 years, from that crisis to the next one as being very remote. Yet here we are. And to me, though, all of the people who were denying the things that I was warning about in 04, 05, 06, in fact, not only were people denying what I was saying, most of them were outright laughing at me. They thought that the comments I was making were so extreme that they were actually laughable. But all of the people who didn't get it then, who thought we were in great shape right up until we went over that cliff, they are making the exact same mistakes now. The economy is in even worse shape today than it was on the eve of the financial crisis. The imbalances that underlie the economy are much greater today. The damage done to our economy by the Federal Reserve under Bernanke and Yellen is far greater than the damage done by Greenspan. In fact, even Greenspan now is making similar warnings to me. He is predicting massive stagflation, economic weakness, runaway inflation. He's telling people to buy gold. And so even he's come around now to recognize what's going to happen, although he doesn't want to accept responsibility for his role, and he doesn't want to be that critical of the Fed because, he doesn't want to throw stones living in that big glass house. But at least he knows that a disaster is coming. And so, how much time do we have? I don't know. But I do not think that Trump is going to make it out of the White House in one term without it collapsing. And this crisis that's coming will be much bigger than 2008. And it'll be far more significant to average Americans in how it disrupts their life, their standard of living. And, the stock market went down in 2008, but it came back, right? So if you held on, you got your money back. Yeah, there are a lot of people that lost their houses in 2008, but those that didn't, in many cases, their home equity has come back. Although, home ownership is at a 60-year low or something like that, so a lot of people got blown out. But, this is going to be worse. I think because this is going to be a dollar crisis, and the dollar's at a 14-year high now, and everybody thinks the dollar's going up. It is about to tank, and it is going to deliver a dramatic reduction in the standard of living for every American in such a profound way. It's going to be something that we have never experienced in our lifetimes.
And it's very interesting. I mean, I look at some of the stories out there that, the Dow, as we're recording this, is, breaking more records. But, Dow companies have reported some of the worst revenues since 2010. So it's, there's really a huge disconnect. So what do you think is going on right now in the markets and the economy and all over the world?
Well, all the markets are going up. I mean, the real story is not the Dow.
Right.
The real story is what's happening abroad. I mean, I manage portfolios of foreign stocks, and, we are just running circles around the Dow. The Dow is standing still compared to what's happening in emerging markets. I mean, a lot of the stocks that I own, and I'm not even talking about the gold stocks that I own. And, of course, the gold stocks are really, as a group, the best performing stocks this year. They were the best performing stocks last year. But I own a number of companies outside the United States up 20, 30, 40, 50, 60% this year. And meanwhile, if you take a look at other currencies, everybody's talking about the dollar going up. Well, the dollar's down about 7% against the Australian dollar this year. There are plenty of currencies that are going up. You still have some problems with the euro, the pound, the yen, and so that kind of masks the underlying weakness that is building in the U.S. dollar, but it is building. And so the weak dollar is going to augment the returns internationally. But I would say that about the worst market you could have been in this year was the U.S., because they're all doing better. But that's the story that the media is not telling. They want to focus on Dow 20,000. But the fundamentals for the U.S. market are bad. The U.S. market is extremely overvalued. Inflation is accelerating. CPI now, year over year, is at a 5-year high and rising fast. Bond yields are on the rise. So higher interest rates, accelerating inflation is not good to a vastly overvalued U.S. stock market. In contrast, there are actual opportunities to invest. As the U.S. bull market is nearing its end, you have bull markets around the world that are just beginning. So that's what people should be doing. And in fact, if people listening, if they want to, participate in this, they can contact me at Europe Pacific Capital or talk to one of my brokers about my mutual funds that I manage, my separately managed accounts, to try to get in on this action. Because the last time we had a circumstance like this was when George Bush replaced Bill Clinton. And under the Clinton 8 years, in the second term, we had a stock market bubble and we had a dollar bubble. And they both popped on Bush early in his administration. And as a result of that, foreign stocks took off, gold took off, commodities took off. Gold went from 270 to 1,000. Oil went from $30 to 150. The dollar got cut in half because the Fed had to come to the rescue when that stock market bubble burst by cutting interest rates and printing money. They're going to do the same thing when this bubble bursts, only they're going to have to print even more money because it's an even bigger bubble. And I think the gains that were achieved during the Bush years, which were huge, and emerging markets were up 400 or 500%. I mean, the party came to an end in 2008. But before that, while people were losing money in the U.S. market, they were making money hand over fist internationally. And I think we're about to repeat that only on a bigger scale. So if you want to get in on it, talk to one of my guys at Europe Pacific Capital and, get an account set up, transfer over. We can manage your money in separately managed accounts, my mutual funds, because I think over the next, 4 to 8 years, the returns are just going to be incredible outside the dollar, in foreign currencies, gold, commodities, emerging markets. As much money as Americans are going to lose, that's how much money people can make purchasing power wise by investing overseas.
Now, Peter, candidate Donald Trump spoke about this massive stock market bubble that you're referring to as well while he was running for president, and that bubble hasn't gone away, as you explained. What are your thoughts on now President Trump's economic policies, some of this infrastructure spending that he's talking about? He's approach to free trade agreements, tax cuts, repealing regulations like the Dodd-Frank regulation, and how would all of this affect Main Street, in your view?
Well, first of all, Donald Trump's ego is getting in the way here because he should continue to talk about the stock market bubble. Because it was a big fat bubble when he was elected, and now it's a bigger, fatter, uglier bubble than it was back then. But he wants to claim ownership of it because now that the market is going up, it's his bubble, and he's kind of using it as a report card on his presidency. And he's saying, yes, I'm doing a great job because the market is going up. Well, that is very dangerous because he's going to be bringing home an F when it comes to the markets in 2020. You do not want to live by the stock market because you die by it as well. This market's going to turn. He's also pointing to the strength of the dollar as some kind of vindication of his presidency. The dollar is going to tank. So what Donald Trump should be doing is explaining why the stock market is so overvalued and why part of making America great again is allowing the stock market to come down. Because one of the reasons that America is not great is because the Fed has diverted all these resources out of the real economy to propping up financial assets. And if we want to free up those resources to create real economic growth that will benefit many of the people that voted for Donald Trump, the stock market's got to come down. But, you know, if he's going to try to wrap his presidency in the veil of the stock market, that's going to be very difficult for him. And, you know, also as far as the deregulation of the rest of his agenda, I think when the markets are coming down, it might make it harder to get some of this done. It would have been better had he just said the market's overvalued and it's going to go down, and that's that. And, it's actually part of the healing process. It's part of what needs to happen to get this economy restructured in a healthy way.
No, I agree with you, and especially, it looks like he's trying to hold on to momentum and in the beginning of his presidency. So, but you know how hard it is too. You ran for office at one stage, so you know how ugly politics is. And I followed your campaign. I mean, you were telling the truth and telling exactly what it is and what people needed to hear. But that's very, very hard to get elected to office doing that.
Yeah, Donald Trump was just telling people what they wanted to hear. He was telling people that he could make America great again in a way that didn't ask anybody to sacrifice anything. And he tapped into a vein that was there because I knew that the economy was much weaker than the media would portray or the Obama administration or the Fed. There was a lot of resentment on the part of the voter because they knew how bad things were and nobody felt their pain other than Donald Trump. And he promised to make it go away. Whereas everybody else was saying, you're not in pain. We want 4 more years, and people rejected that. So Trump was an excellent politician. He knew exactly what to do. He knew exactly how to win this White House. He had a script and he followed it to perfection. And now he's the president. But, the problem is, what do you do now? And if he really wants to make America great again, his presidency has to be a lot different than his campaign. But so far, he's still campaigning. Right.
No, he still is campaigning. He hasn't gone really into, he hasn't really gone into the being of the president mode. Now, you touched on something that people were unhappy, and then obviously there are a lot of unhappy people right now, as there is after every election that there is. And you have provided some really good, just educational resources too. I thought one of your best books was actually How an Economy Grows and How an Economy Crashes, just to teach the basic understanding and fundamentals of economics. Since in a lot of the school systems, and diploma mills, formerly known as universities and colleges, they teach horrible Keynesian economics that, teaches that we can spin our way out to prosperity, and have Keynesian economists in the mainstream like Paul Krugman writing of how preparing for an alien invasion could be great for the economy. So there's a lot of that kind of nonsense out there.
That's the standard Keynesian nonsense that spending money creates prosperity. even if we're spending money to prepare for an alien invasion that's never going to happen. I mean, they don't understand the concept of scarce resources. They think they confuse paper money with actual wealth, right? Whereas paper is just a claim to wealth. Real wealth has to come into existence through underconsumption, through savings, through capital investment, through hard work. It can't be created out of thin air by the government running a printing press or pushing a button on a computer and just creating digits, on a microchip.
Right. And that ties into my question, because there are unhappiness about it. And you tried. I mean, I remember there was videos of you going down to the Occupy Wall Street protest too, try to talk to people and reason with them and try and understand what they were saying to and trying to explain your point as representing the 1%. What would you tell the average person out there listening to it that has seen their standard of living dropping, that they're struggling to make ends meet, they're struggling to afford medical care and so forth? What would you point them to and direct them to as the source of all of this?
And like I tried to explain to the crowd in Zuccotti Park at Occupy Wall Street, and you can see those videos. In fact, somebody recently reposted it. It's got another 2.5 million views, and it got a lot of views when it originally came up a few years ago. But I tried to explain to people that, yes, I understand that you're frustrated, you're upset, but you're blaming the wrong people. You're venting your anger at capitalism when it's government, it's socialism, it's central banking, it's central planning. If poor people want to improve their lot in life, you can't look to the government to do it. The government is never going to help you. The government will pretend they can help you to get your vote. But government help is like, they cripple you. And then now that you're crippled and you can't walk, they supply you with a crutch and say, okay, see, here's the crutch. So without me, you couldn't walk. Well, you would walk much better if you weren't crippled, if you didn't need that government crutch. So if you really want your standard of living to improve, you want as much freedom as possible. It's free market capitalism. It's unfettered liberty. That's what results in rising living standards. That's what creates the opportunity. So if you want more wealth, if you want higher wages, if you want a better job, none of these things come from government. The only way we get it is if government gets out of the way and allows the free market, which is the greatest producer of goods for the masses. It increases quality. It reduces cost. Abundance comes from capitalism. Scarcity comes from government. So that's what people have to understand. I said, look, don't protest Wall Street, protest the Fed, protest Congress, protest the White House, not because they're not doing enough, but because they're doing too much. Everything they're doing is backfiring. Everything they do to try to help us actually hurts us.
You're listening to Peter Schiff on the Cashflow Ninja podcast. We will be right back after a word from our sponsor. International Coffee Farms is a real estate-based specialty coffee farm ownership opportunity. You can own deeded, half-acre parcels in title, already operating specialty coffee farms in Boguete, Panama. They are turnkey managed professionally on your behalf by a team of local experts with sustainable average income of 12% and with cash flow beginning in 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms in Boguete, Panama that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm goes towards a socially sustainable fund to improve the lives of the coffee farm workers and their families. International Coffee Farms currently owns and operates 8 specialty coffee farms in Boguete, Panama, with parcels available for immediate ownership. To find out how you can become a parcel owner, you can download your free income opportunity report at cashflowninja.com/Panama. You're listening to Peter Schiff on the Cashflow Ninja podcast, and now back to our interview. And that ties into the minimum wage, right? Again, back to your analogy of crippling someone and then trying to hand them, a cane. So you've been pretty outspoken about us. About the minimum wage. Can you share a little bit about that with my listeners?
Yeah, I mean, the minimum wage is a perfect example of thinking with your heart and not your head. It's a very emotional issue, and people look at people and they say, "Oh, this person is working and they're not earning a lot of money. Wouldn't it be nice if they earned more?" Of course, yeah, sure, it'd be nice. So they say, let's just mandate it. Let's just require employers to pay more. Well, it doesn't work that way. I mean, first of all, I mean, it's immoral for the government to interject itself into a private arrangement. I mean, employers and employees should be free to strike whatever bargain they want. But forgetting about that, when you enforce a minimum wage, it's really not a limitation on the employer. What you're really doing is limiting the worker. See, most people, the only asset they have to sell is their labor. That's it. That's all they have. They don't have any capital. They just have their own labor. They can work in exchange for wages. And what the government does with the minimum wage is it sets a price floor on someone's ability to sell their labor. What it says is, let's say the minimum wage is $10 an hour, right? So what a worker has to do to be able to sell his labor to an employer is convince the employer to give him at least $10 an hour. Now, how do you get $10 an hour? You have to deliver $10 an hour of productivity to the employer, because no one is going to hire you if it doesn't benefit them. So if you have to say, hire me and pay me $10 an hour, well, okay, what are you going to do for me? What value are you going to give me that equals $10 an hour? Now, if you have more skills and you can deliver the value, well, then you can get hired. But what if you're just young and starting out, you don't have a lot of skills, and the most value you can really deliver to a potential employer is $5 an hour? Well, you're never going to get hired. It is illegal for you to sell your labor at $5 an hour. You have to sell it at $10 an hour. But if it's only worth $5 an hour, you never get a job. Now, that is horrible. Why shouldn't somebody be able to sell their labor for as much as they can get in the marketplace, especially if you're unskilled? Because if you only have $5 an hour worth of skills, the only way you're going to get $10 an hour worth of skills is to get a job, any job, and start learning on the job, start increasing your value so that in a few years you can make more money. But if you never get on the first rung of the job ladder because the government makes it illegal for you to step on that rung, then you never climb up. So this is a terrible law. It doesn't hurt business. Businesses can deal with it. It hurts the workers. It creates massive unemployment. It traps people in poverty. It is probably one of the worst laws ever conceived. And if you go back to the origins of the minimum wage, the origin is racism. It all started based on whites. I think they even had it in South Africa. You know, you want to force people to pay blacks the same as whites so that people won't hire blacks. Right. You know, I mean, right. This was where it started. It was all about trying to deny employment opportunity to people. It began with bad intentions. All the first minimum wage laws began with evil intentions. And now you have these well-intentioned people who have adopted these laws out of compassion. But it's really out of ignorance. If they had compassion, they would abolish all the minimum wage laws. It's not about whether or not we should raise the minimum wage. It should not exist because the real minimum wage is zero. And that's exactly what a lot of people earn because of the minimum wage, because they don't get a job.
And then most of these quote unquote minimum wage jobs are disappearing anyway with technology and advances in automation. So you're going to have to be forced to learn the skills necessary in this information age to be able to provide value for other people, and that way determine your value to the world and to your community.
And look, believe me, if it wasn't for the minimum wage, look, most people prefer to deal with human beings, right? When I go through a voicemail system, you know, I would much rather have a human answer the phone. It's a much better experience, but the minimum wage has priced the human out of the market, right? So if we didn't have the minimum wage, we would have a lot less automation because a lot of people who aren't working would be having jobs. But you know what? These jobs are stepping stones to better jobs. But because of the minimum wage, we are automating all those stepping stones out of existence.
Exactly. And staying on automation and machines and robots and computers replacing a lot of people in the workforce, did you see the article that Bill Gates was speaking about it, and that we should actually look at taxing these machines and robots because, you know, all of this tax revenue is going to go away if we replace all these people that the government is just taxing to death with machines and robots?
Yeah, Bill Gates an idiot. I mean, I talked about that on anybody go to my YouTube channel or my Schiff Radio or my YouTube channel and listen to my most recent podcast. It's called The Iceman Goeth, Robots Cometh. And, you know, the title the reason I got the title is I started to talk about how refrigerators, put icemen out of business, because before we had refrigerators, people had ice boxes, and you needed ice to cool your ice box. And so people delivered ice for a living. And as soon as somebody invented the refrigerator, it put all the icemen out of work. And, I'm just talking about progress. I'm talking about, the wheel put a lot of people out of work. Before the wheel, you needed a lot more people to push stuff around because, you had all that friction you had to overcome. Once somebody invented a wheel, people were put out of work. This is all nonsense. The idea that, we have to punish companies for using tools. I mean, if they did this, Bill Gates would be nowhere. I mean, how many people did Microsoft put out of business? How many secretaries don't have jobs because people have word processors? I mean, it's all nonsense for him to come out and say this stuff. But this is all progress, and progress benefits the very most the poor. It's the poor and the middle class that benefit from all this progress. The rich can afford things. Doesn't matter to the rich if the prices go down. It matters to the poor people.
No, absolutely. Peter, just switching gears a little bit into the commodities. You've been involved with gold money as well, and obviously you have Schiff Gold. What is some of your outlook for gold and silver this year?
Well, gold's going a lot higher. I mean, gold originally broke out of its bear market in about 1999, 2000, came out of its long hibernation, 20-year hibernation, 20-year bear market, and gold prices went from below 300 to as high as 1900 in 2011. We had a 4-year correction, and the bull market has resumed. Gold was up last year. It's up again this year. It's outperforming the U.S. stock market this year, right? For all the talk about the Dow, it's losing value priced in gold. Gold is going a lot higher. We're above 1240 right now today. This is about the highest gold has been trading all year long, but I think it's headed much higher than this. Everybody should own some gold, no questions about it. In fact, what everybody should do right away, who is listening to this interview, is go to goldmoney.com. That's the website, goldmoney.com, and open up an account online. Buy yourself some gold. Doesn't matter how much you buy. You can buy $50 worth, $100 worth, whatever you want. You're going to pay 0.5% over spot. But what you're going to have is an account that is really like a digital wallet that's loaded up with gold. And that account is as liquid as your bank account that's loaded up with dollars. Because A, you're going to get a debit card for free, which enables you to use your debit card and spend your gold the way you would use a debit card on a bank account. Also, the company is signing up more and more merchants, and it's just the beginning, but it's going to grow, who want to be paid in gold. And you can directly pay them, just like PayPal, except your PayPal account is full of depreciating dollars. Your gold money account is full of appreciating gold, and you can use that gold to buy goods and services from people who want to be paid in gold. Of course, you can also gift your gold to a friend. I mean, hey, if you're in South Africa, hey, let's say you wanted me to send you, 100 rand, and you're living in South Africa, and I'm in America. How am I going to send you 100 rand? I mean, what's it going to cost me to wire you the rand? Of course, I got to go buy the rand. I got to take my dollars. It costs me a fortune. But I can send you 100 rand worth of gold from my gold money account instantly for free. Because you can transfer any portion of your gold to anybody else in the world instantly, and that costs you nothing. So it basically creates a commerce system backed by gold. Your gold is stored in a vault with your name on it. It's a Brinks vault, and it's insured by Lloyd's of London. So you don't have to worry about a bank failing and losing your deposits because there's nobody lending out your gold. Your gold is there. It's your gold. You can actually take physical delivery of as little as 10 grams at a time, right, which is a small quantity. They'll send you these 10-gram cubes. But you don't need physical delivery because you want to use the gold in your gold money account as a medium of exchange instead of your bank account. And now you can start not only spending gold, but you can start earning gold. You can save gold. If you have a small business, if you're selling something, ask to be paid in gold. And even if the person who's paying you doesn't have gold, he can pay directly into your gold money account. He can pay with dollars or euros or yen, and it's instantly transferred into gold as it's deposited into your account. So it doesn't matter if they pay you in fiat, what you end up with is gold. So this to me is going to revolutionize money. This is like, Uber upending the taxis. This is going to upend the government monopoly on money, because the reason that so many people have used, dollars or euros or yen is because it's convenient, right? That's why they're using paper over gold, because you don't want to lug around your gold. But the problem with these currencies is they lose their value. They're not a good store of value. But now, thanks to the internet and gold money, it is just as easy, in fact, easier to conduct your commerce using gold than with any of these government fiat alternatives. The difference is gold's not going to lose value over time. It's going to hold its value. And that is the most important characteristic of money, that it's a store of value. So none of this government alternatives work. They are flawed products. They're like the post office. Why use the post office when you can use FedEx? Well, why use dollars or euros or yen when you can use gold? And so this thing is just taken off. So they got about 1.4 million users now worldwide. They're getting at least, 1,000 new people signing up a day. Eventually, it'll be 10,000 a day. This is going to take off at some point, but you want to get in there as soon as you can. And in fact, once you establish your account, you can start inviting your friends to join. And as they sign up, you can earn some free gold deposited into your account every time you get somebody to sign up and buy some gold.
No, this is extremely exciting stuff, and to see what's been going on with gold money through the last couple of years, and this is definitely going to revolutionize this space. And as you mentioned, fiat currencies has a 100% fail rate, so definitely a fantastic alternative. Peter, what percentage of your portfolio or your assets would you recommend that people have in physical metals like gold and silver?
Well, at least 5 or 10% allocated to physical, however you want to do it. But people can decide for themselves if they want to have more than that, or if they want to be even more aggressive. Like personally, I've got a lot of my portfolio in gold and silver mining companies, which provide tremendous leverage if we get the type of move in gold and silver that I expect. If gold prices double, these gold stocks could go up tenfold or more. So if you really want to, make a big wager on this, if you don't want gold just to store your wealth, but if you want to really enhance your wealth, then you can look at these more leveraged ways to get in on gold. I also manage a mutual fund, mutual fund that invests in gold mining stocks. So, and we buy, of course, individual stocks for our clients.
Now, Peter, you're a serial entrepreneur, and one habit I've observed from very wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you currently studying, and what skill sets are you currently learning?
Well, that's a tough question. I mean, I'm not, obviously you're always learning something. Life is a learning adventure that never stops. In fact, I think you really start learning once you get out of school. It's these government educations that really stifle your learning. In fact, what a lot of people have to do once they get out of college is they have to unlearn what they learned, because what they learned was wrong. I mean, basically just having common sense, means you're going to know more than what you would earn at college. I mean, they beat the common sense out of you, in college. Now, obviously if you study chemistry or physics, you're going to learn stuff there, right? But for most people, whatever they learned in high school or in chemistry, they're not doctors, they're not chemists, it doesn't even matter. The stuff that impacts their lives is all the nonsense that they learn. But so I don't know what specific. I mean, every day you try to learn something, but I'm just doing what I'm doing, and it never ceases to amaze me the how ignorant people can be in the face of overwhelming evidence of their ignorance. Yet they still don't get it, and just the delusions, the mass delusions of crowds, that the groupthink, that so many people can be so wrong about so much and not understand it.
What fascinates me is if the majority of people are doing the same thing and not having success and just still following that same advice that's being propagated to them, at what stage do you turn around and see, well, wait a minute, what are people doing differently that are having success and are making progress in the areas that they want to?
Yeah. And, that's the definition of crazy, right? Doing the same thing over and over again, expecting a different result. Well, I mean, so many people are textbook crazy, especially when it comes to their investments.
Now, Peter, a core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
Well, I mean, other than on the big scheme of things, to believe in freedom and liberty and capitalism, and don't fall to the temptation of this collectivism, socialist type mentality that so many people, have embraced, where they look to government for the things that they need and the things that they want. They look, instead of looking to themselves. I mean, what you really need to do is, if you want something, you go out and get it. And what you need is the freedom to pursue your own happiness to the best of your ability. I mean, those were the principles that were enshrined in the Declaration of Independence in the U.S. Constitution. Freedom from government. Those are the rights that we have. We don't have the right to something. We have the right to be left alone by government and by other people, so that we can pursue our own happiness, so that we can be secure in our life and our property, and know that government or other people using the power of government cannot take away from us what we have earned based on our own efforts. And we have the right to dispose of the fruits of our labor in the way that we see fit. So if we want to help our fellow man through charitable endeavors, we get to choose the charities. We get to choose who the money goes to and under what terms it's given. We don't have it stolen from us under the guise of charity, where governments squander, right? But apart from that, just, in your own, whatever I've learned is, when you believe in something, you got to stick to it. You got to be able to persevere in the face of adversity. You can't give up. You have to, you have to know what your goals are. And maybe a good example of that is just the Super Bowl that we just had. When when the New England Patriots were down 25 points in the third quarter, and, no team in history had ever come back from a deficit of greater than 10 points. And in fact, the team that did that was the New England Patriots. They were they had the biggest comeback in Super Bowl history until they just beat their own record. But they didn't give up. They kept on fighting. Right? They didn't let the score deter them. They didn't just, walk away and, we can't come back from this. And that's, when it comes to life, when it comes to your business, when it comes to investing, no matter how much adversity, no matter how dark it looks, you need to have confidence in yourself. You need to have confidence in what you're doing, and don't give up, and continue to pursue your goal until you succeed. And Brady, he always knew. He knew that he could win that game, and his teammates knew that they could win. It didn't matter what the statistics said, what the odds said. What the odds maker said, they had a 99% probability of losing in that third quarter. Didn't matter, because they won anyway. Right. So don't let people tell you that you can't do it, because you can do it. You just have to have confidence in yourself and stick to it.
No, very inspiring. Thank you for sharing, Peter. Peter, how can my audience learn more about you and your companies, your podcast and shows, and keep informed of all of the projects that you're involved with?
Yeah, well, go to my websites for my businesses. Euro Pacific Capital is europac.com, EUROPAC.com. Pick up my most recent book, The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. Also the one you mentioned, How an Economy Grows and Why It Crashes. Buy the collector's edition. You can actually get that book. I think the publishers might be out. You can order it from me at schiffbooks.com, SCHIFFbooks.com, for the collector's edition of How an Economy Grows and Why It Crashes. Sign up on my YouTube channel, right, Peter Schiff, or go to Schiff Radio to listen to my podcasts. Schiff Gold is my gold company. If you want some physical gold in your hand, right, buy some. We ship it out to you. We got great prices. And again, everybody, first thing you do when this podcast is over, open up a gold money account, buy yourself some gold, get your debit card, and spread the word. We need this. This is the best. This is voting with your feet. This is rejecting government money, government control, opting out of their corrupt paper banking system, and just owning gold and say, to hell with it. I don't care about the dollar or the euro. It doesn't matter how many you print, because I don't deal in it anymore. Everybody can put themselves unilaterally on the gold standard. And as more and more people reject government and embrace freedom and own gold, we can take back control from the government back to the people.
Very, very powerful. And we have listeners all over the world. And if you're in Europe, I would definitely do that, especially with the upcoming elections in France and the Netherlands.
Oh, you're sitting in France and you've got euros in a bank account. You may wake up one day and they're French francs. Who the hell wants that? Just take your euros right now and buy some gold today. Get your money. And, some of these banks could fail. Who knows what you're going to end up with? You don't even know. If you've got euros deposited in France or Italy, you have no idea what you've got there. So get rid of them and own some gold. Even if you're in Germany, why would you want to own that currency? Why would you want to own dollars? Why would you want to own the yen? What's the point? In fact, all these central bankers are telling you, we want inflation, right? They say we want prices to go up by at least 2% a year, which means they want to debase the currency. Then why hold it? Why deliberately hold on to an asset that the central bank is telling you up front, if you hold it, you will lose. We will force this currency to lose value so that prices go up. Just get rid of it, own gold. You have all the liquidity and none of the downside risk.
No, absolutely. And as Doug Casey would say, the dollars are IOU and the euros are who owes you nothing. So, Peter, this has been a blast. Thank you so much for coming on the show and sharing your journey and your knowledge and your outlook and just all the valuable things and resources that you have available for listeners out there.
All right. Thanks a lot.
Hi, this is MC Laubscher, the host of the Cash Flow Ninja podcast. As you may know, I'm also the president and chief wealth strategist of Valhalla Wealth Financial. We help individuals, families, small businesses, entrepreneurs, and professionals build their wealth outside of Wall Street and help investors maximize the use of every dollar in their personal economy and boost their investment gains. We do this by combining their capital and investments with the financial vehicle of the wealthy, according to the infinite banking concept. If you are interested in learning more, you can email me at info@cashflowninja.com and I will send you a copy of Nelson Nash's book, Becoming Your Own Banker. Thank you for joining my guest, Peter Schiff, and myself on the Cashflow Ninja today. If you're interested in opening a gold money account, as Peter discussed in our interview, you can go to cashflowninja.com/gold money. That's cashflowninja.com/gold money. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, and your network. I'm always trying to learn and improve in every area of my life, so if there's any way that I can provide more value to you and serve you better, please reach out to me at info@cashflowninja.com. Jimmy Freeland and Bob Scott have been in your shoes and have used real estate investing to become financially free. They've designed a system to take any beginner to an experienced deal-making investor in the least amount of time. They offer opportunities from basic education, coaching, bridge loan investing to turnkey investments in the cash-flowing market of St. Louis, Missouri. For more information, please visit joinupsproperties.com or call Jimmy and Bob at 314-799-2247. Coffee is a proven product in a $90 billion industry worldwide. Through International Coffee Farms, you have a chance to own and operate your own half-acre parcels in a specialty coffee farm in Panama, professionally turnkey managed for you. You can download your coffee farm ownership opportunity report at cashflowninja.com/Panama. That's our show for today, everyone. Until next time, live a life of passion and purpose on your terms.
You have been listening to the Cash Flow Ninja with your host, MC Laubscher, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Today's show notes and resources are available on our website, cashflowninja.com. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objective, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.